Today's edition of Back Roads of Illinois. We were bringing you lasted for farming sources and information sponsored by AgriGold. This is the Markets Club podcast with Ben Brown from the University of Missouri and Clayton Pope from Pope Commodities. Brian Basting from Advanced Trading. We were talking about the farm economy with Ben Brown from the University of Missouri and Clayton Pope from Pope Commodities. We were talking about the fundamentals with Clayton, Brazilian crop production, and planting intention report with Brian Basting. Here is Ben Brown from the University of Missouri. We were going to have a conversation about the grains markets on the fundamentals and planting intention report from USDA for next week. I am joining with Ben Brown for the University of Missouri at College of Agriculture and Food Natural Resources. Ben, let's discuss about the fundamentals from the grains markets, especially with the lower grains markets. What is your thoughts on that?
Yeah, absolutely. Thanks for having me on. I appreciate it. So we're kind of in this unique period of the year to where we're talking about both the old crop, which is the crop that was harvested last summer, still trying to market that product. We call that the old crop. At the same time, where we're starting to hear chatter and market fundamentals come out regarding the crop we'll plant this coming summer, or the new crop market. And so we're kind of in this period of time where we're looking at two sets of different fundamentals for each crop, and sometimes those are in tandem. So sometimes you can say that the soybean market is bearish, and that applies to both old crop markets and new crop markets. And other times, which I would argue this is a year where this is the case, where you have both markets having different sets of fundamentals, both for corns and soybeans. So I think we'll get into this a little bit more, and so I won't give away all the goods here, but I'll simply just say that, on the corn side, I think we have a bullish and very tight corn market for old crop supplies. I do worry about just total supply for new crop heading into the 25-26 marketing year. The reverse would be true for the soybean side. We still have kind of burdensome stocks in the old crop market. However, if we switch as many acres from soybeans to corn as what many people are talking about, that becomes a very tight situation for new crop soybeans heading into the year as well. So we're kind of in a unique period of the year, and also the fundamentals, depending on whether you're talking about the old crop or the new crop marketing year, differ.
Do you have some concerns about the prices for right now with the soybean markets for right now with fundamentals?
So, given where prices sit today and where fundamentals look, I do not have a problem with soybean prices. Obviously, as a soybean producer's son, I would love to see soybean prices be a little bit higher, and certainly above break-even levels. However, I recognize that end users and people that use soybean products, they would rather see lower soybean prices. But the reason why I don't have a problem with where the price action is right now is just how many soybeans are in the global marketplace. When we look at the global ending stocks to use ratios, we're at very, very high levels. There's lots of soybeans, cheap soybeans coming out of South America that are going to dominate the international market here for the time being, and that's going to limit some of the opportunities for us to sell soybeans in the international market. Whereas domestically here in the United States, we have some policy uncertainty and lack of clarity around certain biofuel policies that are really creating some challenges for us to use soybean products domestically. So at the beginning of the year, the 40A, which was the biodiesel blenders tax credit, expired. We were set to have a new type of policy or tax credit go into place at that time. However, with changes of administration, and every administration does this, I don't want to make it out to just one particular administration, but Those rules were placed on a temporary hold for a comment period. We're still waiting for clarity on what that new policy looks like. But in the interim here, what's happened is the biofuel policies that supported renewable diesel and bio-based diesel production have expired. The new policies are not in place, and as a result, we're seeing drastically lower demand for domestic soybean oil use. At the same time that South America is really starting to dominate the world market just because they have cheaper soybeans. And so there's kind of some bearish fundamentals for old crop soybeans currently. And that'll continue until there's clarity known around trade and biofuel policy. But certainly one of the things that's happening is because of all the uncertainties and bearish fundamentals for old crop, that's part of the reason why we see acreage shifting to corn for 2025, 2026, and that could tighten the soybean market up. So I could actually paint a picture to where soybean prices this fall look higher than they are today, just because we're dealing with two different markets.
How is the ratio for right now with break even?
Yeah, great question. So this is something people talk about and look at a lot is the profitability measures of corn and soybeans, especially in areas that grow predominantly corn and soybean production. Here in Missouri, we are a large soybean producing state because soybean yields tend to be relatively more stable than corn yields are. And given, kind of our soil types and weather patterns, soybeans have traditionally been more profitable than corn. And that's still the case today, even with these lower soybean prices. Soybeans still have a little bit more of a profitable picture compared to corn. However, that ratio is a lot closer in Missouri than what it has been in the past, which again signals that that maybe there's going to be some areas that shift out of soybeans to corn, but I certainly still expect in Missouri and places like Ohio, maybe Michigan, to still have more soybeans than corn. However, you get into the heart of the Corn Belt, Iowa, Indiana, Illinois, southern Minnesota, Nebraska. I think we're going to see quite a bit more corn acreage in those states than soybeans.
Why is that the soybean acreage is lower than previously years? Can you explain to our audience?
Yeah, some of it's just profitability. Like I mentioned earlier, in some parts of the Midwest, soybean profitability relative to corn is not as strong, especially in areas where they can grow a really, really good corn crop, like 220, 230 bushels to the acre for corn. That extra yield that you get on corn really, really makes up for the higher input costs that you pay for corn. In states like Missouri, I'm going to throw Ohio into this as well. States where our weather patterns and just our topography, we can grow a pretty stable soybean crop year in and year out, and so in some ways, like that soybean stability kind of outweighs a little bit of the attractiveness, I guess, of growing corn across the countryside. So we will still have more soybeans, but a lot of it's profitability. And then certainly as you get up into like some of the upper plain states, their market is really driven by the biofuel expansion that we've seen for renewable diesel. And a lot of those soybeans go out the Pacific Northwest into the Chinese market. And so, both of those domestic soybean oil used for renewable fuels and then the Chinese market with all the trade uncertainty, those are the two dominating factors for prices in the upper plains, and both of those are big question marks and as we head into the year. And so I think producers are just kind of a little bit leery about what to expect in those markets and backing away from soybeans.
What is the technical aspects on the beans markets? We are watching for this planting intention report, Ben.
Yeah, absolutely. So the planting intentions report here at the end of March is going to be the next big shoe that falls. I think we're all kind of closely monitoring to see, not only what happens with acreage, but even, the March 1 grain stocks report. It has a tendency to create some big movements in the market. It can be a relatively large supplies surprise when it happens, and so we it'll be closely watched as well. And then when it comes to um, you the planting acreage number, just seeing how large of a shift to corn might be happening out there. And of course, when you shift large acreage to corn, some of those are going to come from soybeans, so tends to mean a little bit of a soybean drop as well. You asked about the technical analysis, so right now, the soybean market is still below that 20-day moving average for the old crop futures market, and so I there just hasn't been any indication that we've switched this picture to a buying signal for producers. So I think we're at least here for the next week, maybe heading into the report. I think you're going to see some traders want to take some risk off and have kind of a more neutral position, which I always say the trend is your friend until it isn't, and it's a bit lower, or is a little bit declining picture, and so I think that's going to continue all the way into the March 31st report.
How is the grain stock report for this moment? We were talking for right now.
Yeah, so we'll get the grain stocks report same time at the end of the month. It'll be a point estimate. So they do a survey as of March 1st. It'll be released at the end of the month. It's always highly anticipated because so much of our grain and oilseed use happens during the first 2 quarters of the marketing year. So the first quarter ends on December 1st, the second quarter ends on March 1st. And so a lot of feed grain products gets used. If the stocks number comes in higher than expected, sometimes people, or sometimes that leads people to say, well, maybe last year's production was actually a little bit higher than what we thought. And so March is just kind of one of those months where we can see big shocks in the grain stocks numbers that can move the markets even more, as much or more than planting intentions.
What is your final thoughts on the planting intention report and the fundamentals of the grains markets?
Yeah, so I'm at 93.5 million acres for corn. USDA was at 94. This last week, there was a couple of private firms that came in even above 95 million acres of corn. So I'm in the camp that we will see more corn acres this year than what we did last year, but I'm also in the camp that I don't we're going to see as many acres as what many of the private firms are currently expecting. Now that might show in March 31st planting intentions report, but I certainly think by the time we get around to actual planted acres, I'm just not sure we're going to see the 94 and a half, 95 million acres of corn. So I expect a smaller planted acreage number for corn. I also wonder if this isn't a year where we don't plant everything. I've been asking producers, what are you going to do with that 10 acres, that's kind of back in the trees, surrounded by trees? Are you going to plant it, or are you going to actively manage it as a crop? And they all kind of look around at each other and they go, well, we don't know yet. And so to me, this is setting up to a year where maybe, if the weather is not cooperating, maybe we just don't plant everything this year.
We will see in the northern plains. Thanks, Ben.
Thank you. Appreciate it.
We've been talking with Ben Brown for the University of Missouri at the College of Agriculture. We'll be talking about the fundamentals of the grains markets for today with Clayton Pope from Pope Commodities. How are you today, Clayton?
Hi, Caesar. Oh, I'm fine. I'm getting a little weary of these markets. It's just one day after another. They keep clobbering them.
Can you tell us what's going on with the fundamentals of the grains markets for right now?
Well, they are clearly obsessed with the whole tariff situation, and that is just peak uncertainty. We don't know what lies ahead in terms of not only what we're going to declare, but what the reciprocal or what the counter arguments or the countermeasures will be from the other countries involved. But that's just going to remain a real question mark. Trump is supposed to speak today in about a half hour talking about automobile tariffs, and we'll see. Certainly, the stock market is not taking that news very well. It's down really hard, mostly anticipation of that, I would think. But as far as the pure grain fundamentals, they were kind of hit with a little bit of negative news late yesterday and today in terms of weather. The safrinha crop is just critically important to the corn market. The world stocks to usage ratio in corn is very tight, particularly if you just look at the exporting countries alone. It's very tight, and it makes a good safrinha crop absolutely critical. And it was looking a little less than par for a while there, really up until the last couple of days. A little bit more rain has come into the forecast, and today it got a little bit wetter still. It looks like more where it has been, too dry for quite a while, in like a number of years, really. It is now kind of approaching more of a normal outlook, and I think that really threw some cold water on this corn market and knocked that down. But the wheat market kind of got hit with the same problem. The forecast for a little bit more rain in the Black Sea area and Eastern Europe has hit that market, and even the extended forecast for the plain states here in the U.S. has gotten a little bit wetter, but not until like 7 to 12 days down the road. So that's obviously pretty iffy. But the bottom line is we're looking at a little bit more moisture out there today than they were looking for yesterday, or certainly more than they were looking for a couple of days ago. So I think they kind of emboldened the bears here that came out swinging and knocked this stuff down again. The corn and the wheat. So they're purely in weather markets right now.
How is the fundamentals on the beans markets for right now?
Well, the bean situation, oil crop, in our estimation, looks pretty bearish. I mean, we've got a very adequate carryover. I think it's 380 million bushels, nothing to get real excited about. Certainly enough. Exports have been clipping along at a decent pace, but there's no reason to think the USDA forecast is going to change too much either way. The real debate right now in the bean market, as far as we're concerned, is the new crop, and that November bean contract is obviously going to be impacted greatly by whatever that acreage report says next Monday. The average trade guesses came out in the last day or two, and the published one we saw, I believe, from either Bloomberg or Reuters, had corn acres increasing by 3.8 million acres, had beans decreasing by 3.3. Well, if that is confirmed by the USDA on Monday, that spells a relatively, a tightening of the balance sheet for the soybean market. Of course, you have to make a lot of assumptions as far as export demand because the whole Chinese figure is a real moving target. But if you just use the export numbers that the USDA used in their outlook meeting, if you take 3 million acres off of that, you've got a little tighter bean situation. It'd be much tighter than the new crop corn picture looks like. So, um, again, Monday is going to give us some, a little bit better idea on where this stuff should go. But, just based on these average trade guesses, if that's confirmed, or even if it's a more extreme situation, switch, would be tempted to think beans could see, some improvement from here.
Of course, it's pretty tricky. We will see for Monday.
Yeah, that's the thing. And then, of course, not only do we get the acreage report, but we get the quarterly stocks position and all positions too. So I don't know. The carryovers are, relatively comfortable for all three, corn, beans, and wheat. We don't think the stocks numbers will be too impactful, but you never know. USDA, they're famous for coming up with surprises on those stocks numbers.
What was your thoughts on the planting intention report on Monday from the USDA?
Well, like I said, I think the trade is looking for every bit of a 3 or 3.5 million acre switch from beans to corn. When you look at these crop insurance revenue guarantees, from the February, spring average price calculation, I mean, corn's 4 cents better than a year ago. Beans are what, a dollar, a dollar one, 101 lower than a year ago. So based on that and just the lack of profitability in the beans, whereas corn, a lot of operators can make money at these prices, given a decent yield. I guess I'd take the over on that 3.5 million acre switch. I find it hard to believe it won't be more than that actually. So, like I said, the average trade guess is looking for 3.8. I wouldn't be surprised to see it come out of four something really, 4 million acre increase in corn or 4.5, but we'll see.
Do you have any concerns about the beans acreage, like seeds and chemical?
Um, I think it's going to be a financial decision just as far as the projected or hypothetical gross revenue more than the input impact on it. Of course, that would be a counter argument for a huge switch to corn just because it's so much more expensive to plant. And, for those operators where corn is slipping into a non-profitable outlook, then, maybe some of those acres could switch back to beans. Um, At the bottom line, though, now, I mean, here it is, March 26th. There's, most producers have made up their mind, and that acreage is probably pretty close to what it's going to be. Obviously, some operations can turn on a dime like that, but at this point, I don't think the input question is that much of a factor. I think everybody's pretty much focused on the revenue side of it.
Yeah, especially with the weather in Illinois.
Yeah, we had been hearing an awful lot of talk from our customers in the Midwest here, the three I states, in terms of just how dry it is, and there's a drought, and you got to dig so far down to find some moisture. But boy, we've had a lot of rain here in the last few weeks, and that situation is lightening up a little bit. So I think the drought concerns in the core of the Midwest are greatly reduced right now. I mean, like I said earlier, you still have some problems in the plain states, but as far as the corn and bean belt, um, that's they've had a lot of aid lately, so I don't think that's a factor too much right now.
How about the harvest season in Brazil? Could you explain to our audience?
Well, I assume you're talking about the safrinha corn crop. That's their second crop, but it's by far their biggest one. It's probably 75% or so of what their total corn production is. They have a smaller first crop and then a much smaller third crop. But that second one, the safrinha crop, it's just kind of entering pollination right now. That's why the weather right now is being watched with a microscope, and it's extremely important. And the moisture is coming at a real critical time if it does come as advertised. So that would put their harvest probably in June and early July, and that's when those supplies could be expected to hit the world market, and that's really what their exportable corn supply comes from is that second crop. So, if you look out on the forward market and the cash market on the world basis, you see the impact of the expected availability of that Brazilian crop, starting in July.
What is the yield trends for the second corn crop, Clayton?
Oh boy. I don't really look at it in terms of yield. When we try to monitor South American production, we just kind of look at the total production estimates. Okay, but and I'll be honest with you offhand, I don't really know what that yield comes out to, but the total production numbers have shifted around a lot. But I think USDA is at 126 million metric tons for all three crops, maybe like 95 million metric tons for the safrinha crop itself. So. Um, Obviously, that's a interaction between the acreage and the yield, but we don't really follow the breakdown of that too much.
What is your final thoughts on the fundamentals from this week?
Well, it is important as Monday's report is, it's just one piece of the puzzle. Obviously, the whole tariff situation is another one. And as always, the most important factor is weather. Not only Brazil's first, but the U.S. is later. So even though it does seem like these corn crops are so incredibly resilient, you could still have some stress and some yield damaging weather or at least scares down the road. So all is not lost, even if we do get a 4.5 million acre increase in corn. Um, there's still a lot of things that could happen to give us some boosts in price. But like I said earlier, I think the majority of that acreage increase is priced into this market, and focus will quickly turn to how that safrinha crop wants to unfold after Monday's release.
How about the technical side of it?
Well, it has started to look really better. A week, well, 2 or 3 weeks ago, the 50-day average on both corn and beans had turned higher, and it looked like we were trying to challenge those levels and get the price on the right side of those of the respective averages. But boy, we've really stumbled here lately as the funds have come in and really been aggressive sellers again. It's backed us off way below those 50-day averages, which have now turned slightly lower. So the technical picture is not very encouraging at the moment, especially for beans, I'd say.
Thanks, Clayton. I hope that Duke is going to be champion in the tournament.
Do you? All right. Well, unfortunately, Illinois took it on the chin, but disappointing season. But yeah, Duke. Well, when you watch them play, it's pretty hard to want to bet against them. That's for sure.
Yeah, that's right. Thanks again.
Okay, Caesar, my pleasure. You take care.
We've been talking with. I'm joining with Brian, basting from Advanced Trading. We were talking with him on Brazilian crop production and planting intention report on Monday for us. Let's take a few minutes about it. First up, hey Brian, how are you?
I'm fine, thank you, Caesar. How are you?
Good, thank you. Let's talk about this harvest season for right now in Brazil. Could you tell us about it?
Well, thanks for having me, Caesar. It really is going to be a very critical time period in Brazil for the next 6 to 8 weeks. They're finishing up the soybean harvest as you and I visit here. And the state that we're watching right now is Rio Grande do Sul. It's in the far southern area of Brazil. It's a state that has had hot and dry weather for the soybean crop most of the year. We wouldn't be surprised, Caesar, to see the soybean production maybe edge down just slightly from Brazil in future USDA reports because they are experiencing poor yields in Brazil, in southern Brazil. Having said that, however, it's still going to be a record soybean crop in Brazil, Caesar, and they are going to be a very strong exporter for the next several months. And we're seeing that already here during March. And we expect that to continue all throughout the spring. So I don't want to paint the picture that even though the crop isn't quite as big as what we thought, it's still going to be large. Now we've got also got the corn crop that was planted here in February and March. That corn crop, Caesar, will enter a critical period here during April and the first part of May. It would be roughly the equivalent of June and July in the Midwest. And as your listeners know, that's critical time for corn pollination. Remember, this is corn that's double cropped after the soybean harvest. So this corn is very critical to the market because Brazil has become a very large exporter of corn, almost equal to the U.S. in the world market. So what we'll be watching the next 4 to 6 weeks, I would stretch that maybe into 6 to 8 weeks, is the weather pattern for Brazil as that corn pollinates. Right now, it's been a bit dry the last 60 to 90 days, but there is moisture on the way the next couple of weeks. So again, picture early to mid-June, a corn crop that's getting rainfall is probably doing okay. The critical time will probably be that mid-April to late April time period, particularly for the far northern state of Mato Grosso. So to conclude, I would say that the bean crop is still going to be a record crop in Brazil, maybe not quite as large as we thought earlier. And then the corn crop that's growing right now will be critical to monitor the next 6 to 8 weeks, as that crop will compete with U.S. corn exports in the world corn market this summer and fall. So we'll see how that corn crop does during the weather period here into early May.
What is the soybean yield in Gran de Sol?
The yield is below early expectations, Caesar. They had very hot and dry conditions during the months of January and February. The crop that's grown in that far southern state again of Rio Grande do Sul is the crop that's planted last in Brazil. The crop that's planted first is in Mato Grosso in the far north, and the crop that's planted last is in that far southern state again in Rio Grande do Sul. I'm trying to track down my latest report here from our consultant, and I just found it. He is saying that let's see here, Rio Grande do Sul. He says in some of the hardest hit non-irrigated areas, soybean yields in Rio Grande do Sul are as low as 13. That's 13 bushels per acre. So again, in a normal year, Rio Grande do Sul would account for maybe 14 to 15% of the total production in Brazil. So you can see that with yields that low, that's going to nudge the total production down a bit. But again, I'd reemphasize that even though that yield is that low, that nationwide, with probably about 75 to 80% of the crop now harvested nationwide in Brazil, Caesar, those yields obviously are already confirmed, and it's still going to be a record crop. I just reemphasize that.
Like in low 60s, I do believe for us. Brian.
Yeah, I say for those northern states, in fact, some of those northern states this year, Caesar, had record soybean yields. Goiás is a state that again grows around 15% in a normal year, had tremendous yields. The yields in Mato Grosso in the far north is about not quite, I would say 25 to 30% of the soybean crop. Yields were very good in Mato Grosso, and they are very comparable in many cases to the U.S. yields, which, as you said, are now regularly in the best producing areas, 60 to 70 bushels, even higher in some areas. But Mato Grosso didn't have necessarily their very best yields in an entire state, but overall still very good. And there were other states that did have record yields. Again, a state that neighbors Mato Grosso is a state called Goiás, and they had extremely good yields there. Being weighed down, for lack of a better phrase, at the moment by that sheer size of the Brazilian crop. Brazil has exported, it looks like Brazil will export a record amount of soybeans during the month of March. Again, just during the month of March, but they are really aggressive at the moment. And so the contention is, Caesar, is that maybe our soybean export forecast from the USDA, that's the annual forecast from USDA, of course, that came out here earlier this month. And the USDA forecasts our exports for this year at 1.825 billion bushel. Our bias at the moment, Caesar, is that is too high, just based on the sheer size of the Brazilian crop. We have another unknown, of course, and that is what is China going to do with their remaining sales that they have on the books from the U.S., but have not taken yet. But setting that aside for the moment, and even assuming that China is going to import all the sales they've made to the U.S. or from the U.S., we think the USDA is about 30 million bushels too high. We're at 1.795 on our annual export forecast. So, the bottom line on that, Caesar, is that barring a major surprise in Monday's report in terms of the acreage and or grain stocks report, that the soybeans are looking like they may struggle. Now, we've got a long growing season ahead of us, of course, as you and your listeners know. We barely started planting the 2025 crops. So I don't want to say by any means that this market can't rally, but the soybean market at the moment is dealing with a negative fundamental on that being the size of the Brazilian crop. But again, things can change, and the acreage report will be our first piece to that 2025 puzzle, if you will. And we'll see if acreage meets expectations for beans, falls short, or exceeds expectations on Monday.
How about the technical side of it, Brian?
I would say at the moment, Caesar, that the technical side is looking a little negative for soybeans. We had a market that rallied here last month up to about 1075, 1080. I take that back, about 1080 to 1085 a bushel. This is old crop futures, of course. So we didn't quite make it to that $11 mark. And some of that was linked to uncertainty about South American weather, more so Argentina at that time. That concern has subsided because we've got good rain, or I should say Argentina had good rain during the month of February. That the crop may not be optimal, but it's not a catastrophe as it was 2 years ago. So that the technical side, the inability of the market to crack above $11 and now resting just above $10, it's looking a little bit fragile. That'll be a very, very important price level to watch. We did see a nice rebound rally today led by soybean oil, but $10 would be an important price to watch for old crop. And I'd say that's an important price to wait, important price to watch for new crop also.
Brian, we were going to have more corn acres in the Midwest, about 94 million acres. What is your position on the corn markets for right now?
Fundamentally,
what is your final thoughts on the planting intention report on Monday?
My final thoughts, Caesar, would be from a producer standpoint, we would strongly encourage your listeners to have your positions in place, your risk management positions in place, both for old crop corn, old crop soybeans, new crop corn, and new crop soybeans. Have those positions in place prior to the release of the reports at 11 o'clock on Monday. I went back and looked at the last 25 years or so. Historically, there has been many instances, not every year, but many instances where we've seen a significant move in the market when those reports are released. Now, that move has been both to the upside and to the downside. Of course, price is unpredictable, but my final thought there, Caesar, with regards to the report is there is definitely the potential there, particularly with the participation of the managed money still being significant in these markets, that these markets could move quite a bit on Monday with the release of the report. So my final thought would be to have your risk management positions in place, your marketing strategy in place prior to 11 a.m. Central Time. And we'll see what the reports say and go forward from there. But I think having a position where you defend your balance sheet by having a floor in the market, but having the flexibility to leave the upside open might be a strong one to consider.
What is your position on next Tuesday for the trade factor, one day after the report?
Yeah, that's a great question, Caesar. I think the only thing we can say, and I'll underscore it again, is that price prediction is unpredictable. Price prediction, I beg your pardon, is impossible, and markets can change, and they can change very fast. And in this case, the market could continue to spiral lower if we get the feeling that this trade is going to result in some disruption. in U.S. Shipments, maybe medium term, long term, whatever the case may be. Alternatively, maybe something can be worked out, or maybe that already has been factored into the market with the bearishness we've seen lately. We don't know, Caesar. What we do know is that it does another ingredient, if you will, in the market that has the potential to move prices a lot. And so I think what I'd encourage your listeners again to do from a risk management standpoint is have their positions in place prior to those dates, which would include, as you said, the 31st reports, and then the potential for the reciprocal tariffs just a day or two later.
Thanks, Brian.
Thank you, Caesar. Thanks for having me.
Talking with Brian, basting from Advanced Trading on today's program.
Thanks for the opportunity, Caesar.
Thanks to Ben Brown from the University of Missouri and Clayton Pope from Pope Commodities. Brian basting from Advanced Trading for Advanced Trading. This has been the Markets Club podcast. I'm Cesar Delgado. You have a great day.